Hey, all you cool cats. So let's do big picture real quick, and then we'll get into the charts. So today, obviously, we had CPI come out. We had, a negative month over month. We had a softer than expected year over year. Core CPI was lower than expected. The initial jobless claims was a little bit lower than expected, but that was the only thing that was good in terms of like a not recession. And of course, we had this 30-year bond auction where the yield actually came in a little bit higher. I mean, barely, but it came in a little bit higher than expected. That is not what the market wanted to see at all. And then, of course, tomorrow we got PPI coming in. It's expected to be 0.1%, but given what CPI was today, I guess we'll find out. All right, so we're going to go do kind of like a step-by-step thing. I'm going to go over every screen here, and then I'm actually going to go over some things that we went over in previous videos. So make sure that you stick around because Amazon, I'm going to go over what that chart pattern was and how much somebody actually could have made on that today. So let's kick things off here with the advanced decline line. I am going to zoom on in. This is on the 30-minute time frame. Remember what I pointed out before, how we had this coiling pattern, and I said that the market was like due for a big breakout, and we got that. Yesterday, and then especially like today, at least in the beginning, we had this big breakout of the overall market. And I'll get into this here in a second, but interestingly enough, what I actually see forming right now is a bit of a rising wedge pattern on the overall market. We'll get into what that means here in just a second, but I'm going to zoom back out. We're going to switch on over to the VIX. This was a pattern that I had previously pointed out. We had this wedge pattern going on. Again, you can see fear tried to break out. It came back down, retested this support line. We're only halfway to the pattern target here for fear. So the market still potentially could see red. And, like I mentioned before, I always drag out my support and resistance lines, my channels and all that stuff, because you never know what it's going to reject off of. Look what happened. We had the VIX pop up here, hit the previous support line of this previous ascending channel, and then reject it off of that. We're going to hop on over to the chart of the Dixie, or the Dollar Strength Index. And I've actually got a different set of indicators on here right now. Again, this was the TTM squeeze. This is something I covered in one of the previous videos. Again, we saw this falling wedge pattern. The dollar was targeting around 105. 105.51 is where it seemed like it wanted to go. We had this initial breakout, which appeared to be a bit of a false breakout. And you can see the dollar was waiting on the CPI report to come out. We were sitting on support, just waiting. And once that CPI number came out, and it wasn't what the dollar expected, the dollar finally broke this level and came on down. We actually are in this demand zone again, and you can tell that by this strong rejection of any further price depreciation. So we had a bullish action here, and the dollar popped back up, and you could actually see what the TTM squeeze was doing here. This is on the 2-hour time frame. Volatility was squeezing up into this pattern. We got the initial breakout, and then if you zoom on out to the 4-hour time frame, we can actually see where price was squeezing even more up until CPI, and it was going to break out one way or the other. I truly believe that if CPI had come in hot, or possibly even as expected, I think the dollar would have completed this pattern. But you got to remember, fundamental catalysts, they trump technical catalysts. And why is that? Because the technicals are telling you what the market believes up to a certain point. Once the fundamental catalyst comes out and it changes the mindset of the market, that can completely reverse course for whatever was happening. So keep everything in mind that I just went over, and we're going to go ahead and get into the main market analysis. So we're going to hop into the chart for SPY. This is going to be on the 2-hour time frame. That's where we'll start. So, as I had pointed out previously, we had this ascending channel that SPY was actually following inside of. We had broken down below it, which I mentioned in that video, that SPY was not showing as much bullishness as the futures. And we'll get into the futures here in just a second. But of course, SPY did not break below this support line. This is the resistance line of this ascending channel that's been running for weeks. But as long as you're above a resistance, it often acts as a support. And that's exactly what happened. We bounced off of that. And then, of course, we got the CPI data that came out today. Initially, the market was very bullish about it. Again, it got up into hit this channel and then treated it as resistance rather than support. And then we started this big sell off. And as you can see, we got down to the cloud. We got support right where we would have expected it to happen. And then we'll switch on over to the daily because I wanted to show you something on there as well. So we can see this, we got this big engulfing candle on the daily. We zoom out just a little bit. We can actually see we had some bearish divergence that was forming. And again, I always extend out my support and resistance lines, and believe it or not, you can actually even have support and resistance lines that show up on the RSI. This was a pattern on the RSI before that kind of looked like it was forming like a head and shoulders pattern. And I had drawn that resistance line and moved it on and out. Interestingly enough, look what happened here. The strength of the move got up to this previous resistance and rejected and then bounced down. And let's say something crazy happened and the market just started to sell off. Of course, we got to move our pattern target here for this big rising wedge pattern that we've talked about before. Now the pattern is targeting around 569. Before it was around 460. So you got to keep in mind, the higher that the market keeps pushing, this pattern target is going to keep moving up along with it. Although if we do get an actual market crash, I don't know that this pattern target's going to really mean anything. We could just see like everything go red. But again, we were looking at this rising wedge pattern for this, and I will zoom out so you can see this. We had this much bigger rising wedge pattern here. And then we had this cup and handle that I covered in my very first video. These pattern targets are still live, and we can see that price came up here, basically touched the first pattern target, and now it's rejecting. We could still see price come up to about 580 even potentially. I mean, in a blow off top scenario, we could even see it hit like 600. It's insane, but I do believe once that happens, we're going to see that market crash. All right, so let's switch on over to the futures. We're going to zoom on into the 4-hour time frame. All right, so like we went over before, the futures were inside of this ascending channel. They were very, very bullish, so bullish that it actually broke out above that channel. But you know, sometimes that exuberance it kicks in and the market gets ahead of itself. We got up into this, we got above the main resistance line here, even on the futures, but only temporarily, and then rejected off of here. I think the market is starting to potentially price in the potential for a recession. We're not used to seeing those numbers coming in, and especially with the employment numbers, the unemployment number we've been seeing. Historically, whenever you see something like a 4.1 unemployment rate, it's going to continue ticking up from there, and that's not good for the markets. That's not good for the economy. So let's hop on over to the daily time frame, and I wanted to show you something on here as well. So of course we had this bearish divergence. Look, I mean, look how this was sloping down. This was sloping up. It was very obvious, and one could actually argue that on the daily time frame that we've gotten an RSI double top. And those don't always play out exactly the same way as what you would expect to see with a price double top, but they actually can still play out where we see the strength of the market continue to sell off. So I wanted to switch over to the RSP, which is the equal weighted S&P 500. I'll switch over to the 2-hour time frame real quick. And I want to just show you guys what I'm seeing here. The market as a whole, when we exclude the mega caps that have been leading the market this whole time, the market was very bullish today. They liked what they saw out of the CPI numbers. And if we hop on over to IWM, the small caps, same thing. They were absolutely loving it. I'm going to switch over to the chart of silver, or SLV for proxy. We'll point out what I had pointed out before. We had this rising wedge pattern. We broke down. Then we formed the symmetrical triangle, and I really think the market was just waiting on those CPI numbers. It just hanging on it so much. So price, you know, if CPI had come in hot, we definitely could have finally see this support line of this ascending channel break, but it came in softer than expected, and the shinies, they liked it. So we still haven't met this pattern target. There's definitely the potential that silver could continue on up, and it is still within this ascending channel. I'm bullish for silver long term until I'm not. All right, and we are going to switch on over to the chart of gold. And I want to actually point out a mistake that I made. So this is the 2-hour time frame. I had pointed out in a previous video that what looked like this this head and shoulders pattern, and I want to clean this up just so we can see a little bit clearer. This was the neckline that I had pointed out. In reality, I think what happened, and especially with the CPI numbers that came out, we had a bit of a double bottom here with bullish divergence, and that enabled gold to actually to break out. Now, I do think if we draw a line here, I think gold can definitely continue up, but I would be careful because I think we will see a pullback at some point, and it is at least currently appearing to form a bit of a rising wedge pattern. And so, if you take a measure move here, this is essentially what we're looking at if it does pull back. And so, as a technical analyst, as a chart analyst, sometimes you're going to be right, sometimes you're going to be wrong. And, so if you think technical analysis is hard, just make sure you tap that like button. All right, so let us look at that chart of Amazon and go over that pattern that was previously pointed out. And let's look at what kind of money we could have made. So this was the pattern. This was a target. Remember that I previously said that we were targeting around 193-ish, give or take. And to be careful if you're holding puts as you get to the support line, because there's always a potential that we could bounce. Interestingly enough, though, now you can see we had this big sell-off. We are now below this previous support line. So there is the potential that we could actually see bearishness for this mega cap stock. So let's zoom out real quick and let's look and see what kind of money somebody actually could have made if they had traded this pattern. Just keeping in mind that we hit a peak of about 201.58. You could say an average of around 250 cents. So let's zoom out here, hop on over to the options chart. Let's look at this. We got options. The one that was expiring tomorrow, let's just look at that. Let's say if we started at the 200 strike price, you could have paid about roughly 150. That hit 600 today, pulled back to about 500, went back up to 700. Let's say that pattern target of around 192, 193, let's say we had chosen that instead. You could have paid about $10 for that particular put. We came up to about $40, pulled back to about 25, hit about 100. Obviously, we had some volatility, and then we hit over 100 again. So if you were okay with holding short-dated puts on this, I mean, you could have easily 10x your money. Now, let's say you wanted to give yourself a little bit more time, and you pushed it out to like July 19th. Let's see what that would have done. So if we do the 200 strike price, you would have paid about $315, and near the peak today, you could have sold those for about 700, possibly even about 750. And then again, if we were targeting that 193, you could have paid about $80 and sold for anywhere between 160 to 250, possibly even like 280 at the peak. So depending on the duration and the expiration that you were interested in and that you were willing to risk, you could have made like anywhere from like 3x to 10x your money just on this pattern that I pointed out. Unfortunately, I did not get to trade it because, again, I work full time. So unfortunately, it is what it is. I hopefully that I can start swing trading, but until then, I'm just stuck doing an analysis after the market closes. All right, so let's hop back into some tickers that we've also looked at previously. I'm going to look at Intel. That was a requested ticker, and I definitely want to keep following the progress for that. I had pointed out before that it was very likely to come down to about this 33 mark before we get any sort of bounce. And I think, let's zoom out to like the 4-hour time frame. I think it has to hold above about 33.25, maybe 33.50, or it's become very bearish. You could see from here to here, this was some strong bearish divergence. And, in terms of fair value gaps, we've left some gaps behind here. So unless the market turns bullish, and I don't know that it will because of what's going on right now with like sector rotation, we saw how a lot of the mega cap stocks were selling off today, whereas the overall broader market, especially small caps, I mean, they were just way outperforming. So keep this on your radar. We had so much consolidation before it actually broke out, but if the market's perception of what's going on with interest rates and what the Fed is going to do has changed, we could actually see this retrace all the way back down. All right, we're going to take a look at Tesla. Keep an eye on that one. Again, I had pointed out before, this was a likely area for it to pull back to around the 230 to 240 mark. We could actually potentially see a bounce from here, but again, it really depends on what the market narrative is going to be. I want you to make sure that you leave a comment below with a ticker of your choice. I love doing market analysis for people and trying to help anybody out. If they're new to this and they don't know what they're looking at, I want to make videos that are educational and that are helpful. You want to make sure that you tap that subscribe button, tap the notification bell so that you get to follow along with that analysis, and make sure you don't leave without getting today's trading rule to live by.